Welcome, Bob Desmond from Claremont Global. We're delighted to have you here for this INBrief.
Good to see you, Laurence.
We were delighted to host you at the Investment Leaders Forum in Queenstown. Very collegiate, collaborative discussion. The conversations were about not only investment themes, but also you were able to learn from a series of very senior advisors, some of their challenges. What were some of the key things that you learned from the delegates?
Apart from Queenstown's beautiful scenery and the Pinots and tapas.
Yes.
I think key things I took away was just the demands that advisors have. Just to, as a fund manager, you kind of look at the world from your own perspective always, and you have the best fund and everyone should buy your fund. But actually, if you sit on the other side of the table from an advisor perspective, you can see there's a whole range of really good funds out there, lots of different investment options. There's some of the demands they're dealing with clients. Clients are worried about recessions, fees, all of those sort of things. So it was just interesting for me to sit on the other side of the table. A lot of the sort of group discussions, I struggled to answer some of the questions. But yeah, that was really interesting. And I'll tell you one of the good things, one of the best things was just being away, just being in Queenstown and just the collegiate atmosphere you mentioned, and actually sitting down with advisors in a relaxed atmosphere and talking about what they do.
So quickly on your fund, Bob, high conviction. I was interested, how do you avoid falling in love with a management team, a stock and a business and its story? How do you stay that ability to be analytical and to keep thinking about options?
We have a couple of things. So we have an analyst team. I'm an analyst as well, apart from fund manager. So they hold the two fund managers accountable. So we have a very strict process in terms of that. So that the key fund manager can't just say, this is what we're doing. So if mistakes go wrong, I will be held accountable by the team. But in terms of the process, we do have strict financial criteria. So, decent organic growth in excess of 5%, strong balance sheets, good margins, double-digit earnings growth. So we get all of those things. So if financially the company's not really performing, and then that's probably going to lead into the share price is not performing. And then we have a really strict rule. If the company looks cheap and the share price is underperforming and we're not prepared to add to that position, it's clear we don't have any conviction and we just cut the position.
With your fireside chat, moderated by Tan Sharp, it was one of the highlights of the trip. We had some wonderful questions. You also exist in the world of you're asking questions of business leaders. What are some of the questions that you would ask in the similar situation when you're hosting a fireside chat, learning about an asset?
I think the key things when I go to a business, one of the things I like to ask them is, where do you see the business in 5 years? What's the higher purpose? And when they answer to deliver shareholder value, that's not a great turn on for me. It's like that. Everyone says that, and it means that you're managing for the quarter, where they have a higher purpose in terms of delivering value for customers, looking after employees. That, to me, if they do those two things really well, then the shareholder at the end will be better off. So managing in decades or at least 5-year slots rather than quarters.
So everyone, Bob, had a wonderful experience. A couple of weeks on now, what would you like the key takeaway from delegates to be from your contribution to the conversation?
The key takeaway I'd say is, often if people ask us about a fund, it's only 10 to 15 names. So inherently they feel, oh, that's concentrated, it's too high risk. And actually, if you buy really high quality businesses, which we do, they actually can take the risk levels down a lot. And I think one of the benefits of having that focused quality portfolios is that the advisors and their clients get to understand the process and the businesses that they own. So we want clients to talk about the businesses, not to ask us what's the market going to do. We want them to ask what the profits of the companies are going to do and what are the valuations. So if they could take that away. And the other thing as well, it is a sleep easy at night fund. So when you're in high quality stocks, when the market's falling, you can rest easy knowing we've got strong balance sheets, good cash flows, and these companies are going to be around for a long, long time to come.
Thank you so much, Bob Desmond. We look forward to hosting you over in Noosa in a few weeks' time.
Thanks, Laurence.